Thank you, Jan, and that was an outstanding summary. I need to get a copy of that. It was a great review of where we've been. I changed my title a little bit to where we've been and where we're going. It should be called When You Stand in the Middle of the Road, You Get Run Over, because that's often the way I felt on working on many of these natural resource issues, and I've been known to say some things that have sometimes been provocative, and I probably will today, and so we'll just go from there. So I'm going to talk about conservation strategies on private land, and one of the reasons I got into U.S. Forest Capital and conservation finance was because I felt that by the time we had worked through the Headwaters Agreement, and my job, by the way, was to go find $250 million of money outside the appropriations process. So I was running around California trying to sell buildings, mineral leases and all those kinds of things, and it turned out that nobody, whether they were in the business community or the real estate community, wanted to do that. So we ended up getting appropriated dollars, as many of you know, along with those from the state of California. But I said there's got to be a different way, and how do you bring in private capital markets to achieve your conservation goals? So I'm going to talk about that in a few minutes, but Jana first asked me to talk a little bit more about the background the last 20 years, more from a political standpoint. And so I'm going to talk about three events that took place that I think had a bearing on many of the changes that were just reviewed. The first is the Northwest Forest Plan, the second is Headwaters, of course, and the third is the rise of this alphabet soup that we call TIMOs and REITs. And I'll get into that in a little bit more detail, what those are. There were really four important sort of drivers, I think, for these three events. One was scientifically, and 20 years ago, we were first talking about this term ecosystem management, which today is sort of, we've almost moved beyond it. It's basically institutionalized, I think, in all different types of ownership, whether it's public, state, private, native, nonprofit. But at the time, the scientific community was really trying to come up with principles that would integrate management objectives. And so I think that was a very important driver at the time. Economically, following the recession in the early 80s, which was a really tough one, the forest products industry was doing great. There was a lot of talk about efficiency and the reduction in jobs because of that efficiency. There's truth to that, but the fact of the matter is the industry was doing well, and timber supply was, frankly, a primary driver for their ability to maintain their mills and maintain their businesses. Politically, this was sort of an interesting one, and I think people do forget this. Everybody thinks of the left coast as a red, Democratic, but 20 years ago it was purple. We had a lot of statewide officials that were Republican, Democrat, and they were moderate. They weren't really on the extremes. Sure, there were a couple of them, but overall it was a moderate Democratic, Republican political structure, both in the Senate, House of Representatives, state houses, and that was important. In fact, Bill Clinton, who won with the minority of votes, I think it was 42%, Oregon, Washington, and California were very politically important to him, and that was one of the drivers for why he became involved in the Northwest Forest Plan. And then finally, legally. So nation's environmental laws had been passed in the 70s, early mid-70s, as you all know, but it really took 10 to 15 years for those laws to get transferred into rules, to get implemented on the ground, and then get challenged. And so it was 15 years later, the late 90s, the late 80s, see, I can't even keep my decade straight, late 80s, where we started to see injunctions. First it was on a forest up in Oregon, then it was on a series of salvage sales, and then suddenly it was across 24 million acres from, Mendocino County all the way up to Canada. And it's in that context that we started to see these three events occur. The first is the Northwest Forest Plan. And I think, and most of my conversation today is going to be focused on private lands, but the reason this public land issue is so important is because it's really the first time that an ecosystem management approach was developed at scale and implemented. And as a result, the plan established new rules for threatened and endangered species, for water quality, and hopefully, one of the objectives was timber supply, albeit at lower levels. 75% of the public forests, from the Mendocino and Klamath forests up to the Mount Baker Snoqualmie, were basically set aside to meet the objectives of our environmental laws. There was a hope to achieve 1.1 billion board feet in timber harvest. The reality is that never happened. And I think it's one of the issues that is having ramifications here 20 years later on some of the challenges to our nation's environmental laws and how they're being implemented. Its impact wasn't just in this region, it was across the nation. And while there isn't a East Coast Forest Plan or Rocky Mountain Forest Plan, when I started working on these issues, national harvests were 10 to 12 billion board feet a year, 10 to 12 billion. This year, I think last year, they were 2.5 billion board feet. They were primarily thinnings, which is great. But the regeneration harvest, whether it's through an ecosystem management approach or uneven management or variable retention, hasn't really been, that's sort of gone away on our public lands. And I think it's one of the reasons that there is animosity that exists towards a number of our nation's environmental laws. And for those, my view is when these kinds of things happen, we need the Marshall Plan, not the Treaty of Versailles. And so I think it's another reason it drove me into this conservation finance world, that trying to figure out how to create structures that allow for sustainable harvest and environmental protection are really important. I think on our public lands, that's a really difficult decision to have because everybody owns them. Anyway, the second issue, headwaters. I don't say this to be disparaging, but it's important to put headwaters in context. It was about 10,000 acres out of a 200,000 acre forest. Having said that, it was the largest remaining unprotected grove, and MAXAM's intended rate of harvest and the manner in which they interacted with concerned citizens created a firestorm, as you all know, and many of you lived through here in Northern California through Redwood summer and many of the things that took place. I think the importance of headwaters, in addition to the protection of that grove, from a larger policy standpoint, is it really created increased attention to private forest management. It would take another 10 years, but I think it sort of created a seed for doing different types of forestry, and that's going to, again, we're going to talk about conservation alternatives. And it also, again, not directly, but indirectly, created another round of forest practice concerns and therefore rules in the state legislature that drove the cost of industrial forestry up, which had an impact on how the investment community, the timber investment community, the timber industry, integrated companies, and the timber investment community viewed forestry in California, which was a driver in why we have the type of ownership structure that you outlined, Jana, so well. So I think it was sort of a spearhead, and I think that's why it was important. So finally, the rise of TIMOs and REITs. TIMOs are Timber Investment Management Organizations, which is a fancy acronym for entities, companies that go raise money from independent third parties, pension funds, $1 billion or $500 million, and then they're responsible for going and buying land and managing that in the best interest of their investor. A REIT, Real Estate Investment Trust, which was really started on the traditional real estate side of building, was that structure, which can be public, was transferred over to timber. I won't go into a lot of details on it. It's a tax advantage system so that if you can go buy Weyerhaeuser shares and you get a bigger dividend, and that's what a real estate investment trust. They have many of the same financial objectives as a TIMO did. So, and we heard about this a little bit, but this one diagram here shows that between 1996 and 2006, which is really between 1996 and 2006, really going back to 1990, but we didn't have the data, we have this massive change in ownership that we talked about. And by the way, this is a national number. These are not California only. 51% of our nation's industrial timberlands were acquired by TIMOs, 13% by REITs, and 14% by private. And I would put Humboldt, these are private families, high net worth investors, like Humboldt Redwood Company and Mendocino Redwood Company, they would fit into this private category. So 78% of our nation's industrial timberlands changed hands, 80% changed hands over about a 20-year period. That's really amazing if you think about it, and had big impacts. Industry was still buying, and they still are buying, albeit at a lesser rate, 19%. Most of those transactions were at the beginning of that period, not the end. And then you've got this little green sliver, which is conservation. And this is the interesting, and I think the opportunity associated with this new land ownership structure. We don't have the battles that we had sort of philosophical of one versus the other. If a conservation buyer can afford to pay a financial investor, a TIMO or a REIT or a private seller, is willing to sell to conservation. And there may be all kinds of different reasons for doing that, but conservation started to play really in the mid-2000s, mid-aughts, and they continue to do today. So what did this all mean? I just mentioned the statistic. Approximately 80% ownership change between, it was really 1990 and 2007. Timber became a hot investment. I mean, there were all kinds of articles in the Wall Street Journal about timber, buy timber, it's a great asset class, and there's all kinds of different reasons for that. During the recession, an important thing happened. Back up a second. One of the reasons financial investors bought timberland is because unlike buildings that decrease in value or have a hard time getting renters, timberland is an appreciating asset, right? So you cannot cut it for 3 or 4 years, and it's gross. And so then when the market comes back, you have an asset with more value. And so one of the conscious decisions of timberland investors over the last 20 years has been, hey, let's buy this asset and we can time markets. So in the recession, what happened was we had a whole bunch of auctions, timberland auctions that failed. And the reason they failed is because the buyers wouldn't pay that price. And the sellers said, fine, we'll just wait. And so the asset performed as projected, storing and growing capital. And so when the last 3 years, the market has come roaring back. In Oregon, timberland, I think at the beginning of the recession was going like $2,000 to $3,000 an acre, and now it's $4,000 plus. This is for industrial timberland that's been hit pretty hard. So it's an interesting thing that's been going on. Those are the three things that I think really had an impact on the ability to do conservation. And I could spend half an hour talking about what is conservation. I mean, conservation in the purest sense is Gifford Pinchot's definition that you don't overharvest, and many believe, and I believe, that industrial forestry is a form of that. On the other hand, conservation can be the preservation of unique ecological areas that, Redwood, say the Redwoods Leagues and others have, TNC Conservation Fund has spent so much time on. This is sort of where I get into the standing in the middle of the road, you get run over piece, but it means different things to different people. What I'm talking about when I talk about conservation, this is one definition, is conservation strategies that seek to do a little bit of both. Have some level of sustainable timber harvest, have some level of environmental conservation and environmentally different forest practices. And when we approach our deals, when we sit down with a client and approach our deals, we really talk about 2 or 3 things. The first thing we talk about is what kind of governance structure you want. What's your who's going to make the decisions? When I say governance structure, I'm talking about who's going to make the decisions. And historically, people look at pure public, National Forest, National Park Service, or pure private. And what I'm trying to get at in this slide is that there's different ways to create governance structures. You have private nonprofit organizations like the Redwood Forest Foundation, I'm going to talk about in a second, or Save the Redwood League. You have what's called an instrumentality, which is a publicly authorized but privately run body or organization. And then you have I'm calling it a forest authority. That's where, it's like the U.S. Post Office, where it's a public entity, public corporation, but it's run independently. And the difference between these ovals is, who owns the forest, who controls the decisions, and to what extent there's public involvement. How is it financed and access to finance tools, and where are revenues distributed? That's a really important one, right? So when we look at these conservation strategies, that you'll be seeing in a few seconds, this whole concept of governance is really, really important, both in terms of making the decision about how forests are managed, but also on how you can access different financing vehicles. I'm going to go through this one really quickly. Actually, what I'm trying to get at in these two slides is focus in on this yellow box. I call it conservation management. If your cost of capital is 6%, if you go borrow 6%, or if you're an equity investor and you have to achieve a 6% return, but your conservation strategy only produces 2 to 4%, you've got to, there's a gap there, and that's been a huge challenge with these conservation deals. Is because the conservation that you want to achieve is a 2 or 4% return, but you can't raise the money at a 6% return, and so it sort of drives land ownership towards commercial management and conversion. Not that that's, there's ways and places to do that. That's okay, but this has been, I think, we're talking about the last 20 years, this has been a huge challenge. What we try and do with our conservation strategies is sort of turn it the other way, is how do you create a governance and financing structure so that your 4% capital cost equals a 4% return. And I'm not going to go through these in details, but there's really two ways to do that. One is through financing. And I'm sort of getting into the weeds here, but financing is to summarize all about your capital cost. If your capital cost is 1 or 2%, you can pay more. You can pay more and prices rise. If your capital cost is 6%, it's less. And so, from a conservation standpoint, if we can come up with financing sources that have access to 2% capital, we can apply that to our conservation objective versus our financial objective. So I'm hoping that makes sense. Maybe a couple examples will make more sense. And then we can buffer that not just with sustainable timber harvest, but with an array of ecosystem services: green development, wetland mitigation, banking, carbon, water truss, wind. And so you look at the governance, look at the financing, look at the ecosystem services, and I'm going to talk about 3 or 4 examples of different conservation strategies that are sort of in those middle ovals. The first is the one that's best known. Just to summarize, this is where you have a private buyer with a public partner. The for-profit buyer, this in California, we heard about Lime Timber Company, New Island Capital, in other other large, Plum Creek Timber Company used to do this. A lot of large timber companies will go and buy the underlying fee, and then they will work with a conservation partner to buy a conservation component of that deal, a conservation easement or a fee sale or a carbon deal. So they are usually in the $10 to $50 million range. The largest I know of was $500 million in the state of Montana. And the example I have here is in the Snoqualmie Forest, where Hancock Timber, this is a deal we worked on a while ago. Pardon me, the Hancock Timber Resource Group bought 100,000 acres, and they sold a conservation. This is very simple, but they bought 100,000 acres. It was right next to Seattle. They sold a conservation easement to the Cascade Land Conservancy, and the property was conserved from development. And this is a good example of the type of conservation strategy that's happening in Northern California and across the country. The next deal I'd like to summarize quickly is the Utah Redwood Forest. This one's near and dear to my heart, as many of you know. I've been knocking around on this one for 10 years or so. The buyer is the Redwood Forest Foundation. It's a nonprofit forestry company. Mark Welther and Steve Smith are here. They're going to talk much more about this in a few minutes. Jan is saving me with some water. Thank you very much. Appreciate that. I think this is the first of its kind. Our conservation partner was the Conservation Fund. Pardon me. 50,000 acres, $65 million, worked with California Prop 84 funds. And this was financed through commercial debt. That was in that first category through Bank of America. And then we sold a conservation easement. We sold fee to the Save the Redwood League, which was for a unique ecologically important asset where there was no timber harvest that was desired. And then recently because of the preferred forest management approach, we registered a very large carbon project, which just came to fruition, just was approved by ARB last month, 3.1 million tons. And the remaining debt service is going to be through timber harvest. It closed in June 2007, and once the debt is serviced, it will be, those revenues will be able to go back into the conservation of that resource, other resources, and the community. Mount Emily, this is a deal that we did in Oregon. This is in Union County, an area that is highly dependent on timber harvest and grazing and mining, but they care about how their resources are managed. 4,000 acres was going to be subdivided into 10 lots. They didn't like that, and so they worked with Department of State Parks, and actually which had an ORV fund, which this is an interesting use of public resources. And they agreed to create an ORV park on part of the property and consolidate use, which is actually, from a conservation standpoint, a benefit instead of having it all over the property. And so they were able to secure ORV funds, and then they did what's called a timber deed, which allowed the landowner to the existing landowner to maintain one round of timber harvest, and then after that the county would retain the underlying fee. And so that reduced the purchase price by about $3 million because the original landowner, the seller, got one last harvest, and the buyer just had to come up with the money to buy the underlying fee, and they agreed on a type of forestry approach. It wasn't clear cutting, it was an uneven age management, sort of shelter wood type combination mix. And then this last one, and just really quickly, the Skyline Forest is 30,000 acres right outside of Bend, Oregon. And if you're in Bend, Oregon, you look up, you think it's the national forest, but it's not. It's all private forest land. And the landowner wanted to take that 30,000 acres and subdivide it. And they cut a deal that allowed the landowner to concentrate up to 300 units on 200 acres in exchange for selling the remainder 31,000 acres with like a 1,000-foot buffer for timber value. So instead of it being a $40 million deal, it was about a $7 or $9 million deal. The governance structure in this case was just a traditional nonprofit. And so really what I'm trying to show with these examples is that depending on your perspective, you can put a governance structure, a financing structure, an ecosystem service structure together to actually participate and raise large sums of money. When I say large, I mean, $10 to $100 million to maintain working forest lands and achieve your conservation objectives. Let me just close. Opportunities and challenges. Jana, you mentioned this cooperation. I mean, it is a different day. There's still strong differences of opinion, but conservation community, the landowner community, is working together, and it's been exceptionally rewarding for me personally in participating in governance structures where you see the results of that. These new ownership structures I've talked about, people are less sort of stuck in their, views on which one is better than the other, and it's a more holistic approach, which I think is great. I think one of the great things about land ownership in the United States is you do have this range of different ownership structures. And then this whole concept of impact investing, many of you may have heard of that. There are folks with high net worth individuals and pension funds that are looking to do impact investments, which in addition to their financial return includes an environmental return, governance return, and social return. Shouldn't kid ourselves, financial return is usually number one, but it's an important new vehicle for folks. Challenges, public funding. I talked about the problems associated with Northwest Forest Plan and some of the difficulties and animosity towards our nation's environmental laws. That is very real. Actually, I think the North Coast you don't see it as much as you used to, but in other parts of the West and the Southeast, you really see it. And it's flopping over into support or lack thereof of public conservation sources like Land and Water Conservation Fund, Forest Legacy Program. I'm not up to speed on what's going on in California, but I think even in California. So support for traditional public funding, which is important to be making these deals like I just talked about worked, is important for everybody to work on together. Disenfranchised communities, this is sort of the point I was just making. We need to create Marshall Plans and not treaties of Versailles when we have large changes in the way we manage our lands. And then this issue of single species versus ecosystem management. This was a challenge on the Northwest Forest Plan. You do what you need to do for the owl and the meerlet and the fisher, and suddenly there's nowhere to go. And versus an ecosystem management approach, which Jack Ward Thomas, former chief of forests, stated, let's provide a home and do the best we can. And there's no good answer to that because it's a constant tension, but I think it's something that we need to work out. Let me just close with my view, on all this, big picture view. More 80% of U.S. industrial timberlands have sold since '96. And in my view, keeping working forests working is to the 21st century what deforestation and forest practices was to the 20th century. Not that those two other things aren't important to continue to work on and maintain, but I hope that folks in this room and in other places will continue to keep working forests working to some degree. And thanks for your time. You got any questions?
We have time for a question if somebody would like to ask one.
So how long before the REFI debt is paid off?
I'm sorry, how long before the REFI debt is paid off? That's a good question. I'm gonna punt to Mark Welther on that one. I will give you the short version. There's a couple different tranches of debt, and with the carbon deal, I would just say that and the sales associated with that I think the Redwood Forest Foundation feels pretty good about their ability to service their debt and retain that property in the future.
Thank you. Well, thank you very much, Tom. That was a great kickoff.